So with regarding to the undisclosed income, we have understood that 60% is the flat rate, 25% is the surcharge, and 4% is the HEC. So total, remember people, you please don't add the direct additions of 60 plus 25 plus 4. Please don't do such thing. It is not 60 plus 24 plus 25 plus 4. It is not 89. You have to calculate, take your calculators. First add 60 percentage plus 25% plus 4%. The effective, the total effective tax percentage of undisclosed source of income is going to be 78%. Remember, it's going to be how much? 78%. This is what? This is your undisclosed source of income for that matter. Now, first of all, what is meant by this undisclosed source of income? Wherein you have earned a certain income shown in your books of accounts, but not able to give a proper explanation or not able to satisfy the assessing officer with regarding to the source, nature of the income, and the other explanations for that matter, then the assessing officer is going to treat those income as undisclosed income and close. Clear? Now, first of all, first comes with the cash credits. First comes with the cash credits, which is section 68. See, wherever the explanation with regarding to the cash credits, you have certain deposits which is made in your books of accounts. That is, it is made in your bank account. And these cash deposits which has been made, the cash deposits which has been made, you are not able to or unable to provide the explanation. Good explanation you are not able to provide. Then in that case, then that case of whatever the income which is deposited will be considered as your undisclosed income. Remember why undisclosed income is very dangerous for that matter, because once you treat it as undisclosed income, then you have to pay the tax at the rate of 78% as your effective tax rate for undisclosed income if it is treated as undisclosed source of income. Simple. Next, unexplained expenditure or the investments. The unexplained investments, the unexplained expenditure or the unexplained investments means wherein the investments have not been recorded in your books of accounts. That is, individual makes an investments and without recording them in their accounts, and is not able to provide or is not able to provide the satisfactory explanation to the assessing officer that how did he earn such investment. If he has told 10 crore is that investment value, or if where did you get the 10 crore rupees from, money into that investments. Understanding that source of income you should explain. If you provide a satisfactory information or explanation, then the assessing officer is not going to treat it as undisclosed income, is directly going to treat it as that is disclosed income and is not going to tax for the same. If you have not provided the explanation, then definitely it is going to be considered as your taxable, undisclosed taxable income. Clear? Unexplained money. This also goes with the same thing. You provide satisfactory explanation, very well, fine. Not satisfactory explanation, and I consider that income as your, that money as your undisclosed income. Amount of investment not fully disclosed. Now, intelligently, what that person has done is that out of 10 crore worth of property, a partial portion, 6 crore worth of property in my example, he has shown it as his disclosed income, and he has shown this in his books of accounts and is able to provide explanation also for that 6 crore. That is, I've already paid the tax for the 6 crore. I got it from a business. I have paid the tax for it. This is how the investment of 6 crore happened. Arey, very well, fine. What about this 4 crore rupees? 4 crore of investment which you have done, where the total investments which you have done is 10 crore. 6 crore you provided information, very well, fine. We are happy. What about this 4 crore? Give me the explanation. Able to give the explanation? Disclosed income. Not able to give a satisfactory explanation? Undisclosed income. Once it is treated as undisclosed income, 78% flat tax. Finish, Govinda. Done. Clear? Next, unexplained expenditure. See, people, in order to understand this unexplained expenditure, try to understand. Okay, this. Let's consider your sales is 10, your expenses, sales is 10, your expense is 4. How much is your profit going to be, people? Profit is going to be 6, correct? If you increase your expenses to 5, what will happen to your profit? Profit becomes 5. That is, can I say, if your expenses increase, your profit decrease. Suppose your expenses becomes 3, then your profit becomes 7. It means if your expenses increases, sorry, if your expenses decreases, your profit increases. Correct? Now, if person doesn't want to pay tax, higher tax is based on your income. If your income is higher, the tax is also higher. So what that fellow will do, that person will do is very simple. He will try to increase his expenses so that he will get less profit. Less the profit, less the income tax which he pays. Simple. So if this is identified by the assessing officer, then he asks the explanation for this expenditure which you have recorded as 4 over here. And the expenditure can be 3 also. The expenditure can be 3 over here. That is, you have explanation for 3 expenses but not 4. That difference of that 3 and 4, 1, whatever is there, that is going to be considered as your income, undisclosed income. To the extent you are able to provide explanation for the expenditure, that is going to be considered as your explained expenditure. Not able to provide information, then it is going to be considered as unexplained expenditure. Once it is treated as that, it is treated as undisclosed income. Once it is treated as undisclosed income, 78% pay the tax. Go with that. Finish. Okay. Amount borrowed or repaid on hundi. People try to understand. Okay. If you borrowed the money or if you have repaid the money in a form other than bank check, that is account pays check for that matter, then that income is going to be considered as your undisclosed income. More about this concept of the payment and the amount to be received, you are going to study in your finals. You have the provisions over there, wherein the penalty which is being charged is 100%. You're going to study over there. Not okay. Understood about the undisclosed income, undisclosed sources of income is clear. Now, the concept of a rate of tax. See, try to understand. And all of us know that is undisclosed income. The rate of tax which is applicable is how much? 60 plus 25 plus 4. That is 60 plus 25 plus 4. Total effective tax rate being 78%. Remember everyone. Clear? So now if we are trying to understand about the rate of tax surcharge for that matter, see, first of all, rate of tax information is given in your Finance Act. Finance Act 2023 is applicable for our upcoming, that is relevant previous year, whatever we have considered as Finance Act 2023 is applicable. Clear. Income tax, always remember it is charged on every person. Need not worry about it. Try to understand something about surcharge over here. Okay. What is meant by surcharge? See, what is meant by surcharge? The point of surcharge, how this surcharge can be treated is that try to understand the applicability of the surcharge and the taxability of the surcharge. First, I'll tell you the taxability. Okay. Then we will understand about the applicability later. Always remember, surcharge is an additional tax. That is, it's a tax on tax. Let's take a simple example. The tax liability for our example is going to be 10 lakh. Example only. Tax liability is 10 lakh. If I'm going to charge the tax liability as 10 lakh, the surcharge, let's consider the surcharge applicable is at the rate of 10%. Okay. Surcharge is always applicable on the tax liability. That is nothing but 10 lakh into 10% will be my surcharge. Everyone, 10 lakh into 10%, that is 1 lakh will be my surcharge. On that, I'm going to record HEC at the rate of 4% mandatorily, and I'm going to record my totals. Finish. More about the surcharge understanding, you will understand once we are moving forward. Need not worry about it. Clear? Well, always remember, surcharge is an additional tax payable over and above the income tax which is being charged. Simple. More about it in the classes, further classes. It's sweet. See now, HEC, we have told HEC Health and Education says is going to be 4%. The rate of tax which is applicable for health and education cess is going to be at the rate of 4%. Next, the individual HUF, Association of Persons, Body of Individuals and AJPC. Try to understand something. The tax rate which is applicable, for individuals, HUF, AOP, BOI, AJP, we have two tax rates, two different tax rates applicable. That is, we can select either one. These are the optional tax rates which is available. That is, one in case of normal provisions and another in case of the concessional tax rate, which is also called as default tax regime, which is coming under section 115 BAC. You can select this or that based on the eligibility. Simple. Individuals, HUF, AOP, BOI and AJP can opt for these things. Simple. Everyone. See, try to understand about the individual tax rates and the tax applicability for the finance. Now, what are the tax rate which I'm going to consider over here? The rate of taxes for comes under the three categories. One, for non-senior citizen, this is I'm speaking about normal tax provisions. I'm not yet touched or entered into 150 BAC. That is for non-senior citizens, for senior citizens, and for resident individuals at the age of 80 or more at any time during the PY. That is, I'm going to consider this as three categories. That is for non-senior citizen, senior citizens, and for super senior citizens over and above 80. Clear? Let's try to understand one by one. People, this detailed revision is being taught with an intention. You have basic knowledge with regarding to tax, or you have certain knowledge with regarding to tax, and even if you have no knowledge with regarding to tax. Okay, I've taken everything as the base and I'm teaching you in a very detailed, proper, revision based manner. If you have a certain knowledge, then very well fine. If you have no knowledge, then also it's fine. You'll be able to suffice or survive in this. Clear? Non-senior citizens means being a resident individuals of less than 60 years for that matter. Non-senior citizen means less than 60 is what I've written, people. 60 years is not included. It means if you are 59, is this table applicable for you? Yes. If you're 58, is this applicable? Yes. If you're 25 applicable? Yes. If you're 65, it is applicable? No. Less than 60 is what I told. Is exactly 60 included? No. If you're exactly 60, then this table is not applicable for you. The next table will be applicable. Okay. We keep this point in mind. The important point over here is 60. Done? Now, see, if your income is up to 2.5, what is your tax rate applicable is nil. That is up 2.5 lakh, whatever has been recorded over here, it is called as a basic exemption limit. What is it? Repeat after me. It is basic exemption limit. Clear? If it is up to 2.5, basic exemption limit, 2.5 to 5, it is going to be 2,50,001 rupee. That is, you can just call it as 2.5 lakh. 2,50,000 to 5 lakh rupees, you are going to tax. That is the tax rate which is applicable is going to be 5%. Up from 5 lakh to 10 lakh, the tax rate which is applicable is 20%. And about 10 lakh, the tax rate which is applicable to 30%. Clear? See how the calculation goes. The calculation for this matter, after completion of the surcharge, we are going to do two questions which is there in your test your knowledge in your ICM material. We are going to look into that questions. We will have a detailed understanding with regarding to the entire concept of the individuals. We are going to do that question. Need not worry about it. As this is a detailed revision base, we are going to solve certain questions as well. Done? Great. We'll move forward. Up to 2.5, nil. 2.5 to 5, 5%. 5 to 10, 20%. About 20, 30%. Finish. How are we going to do this or to consider the calculation? We will do it once we get into the question. Simple. Okay. For senior citizens, for being a resident individual at the age of 60 or more but less than 80. See here, 60 years is included but 80 years is not included is what I've written. This is my note. What does it mean? Is 59 included here? Absolutely not. 59 is included in this table. Is 60 included? Yes. 65 included? Yes. 79 included? Yes. Is 80 included? No. Because I've written over here, it is very clear. This is for senior citizens between the age of 60 or more, but less than 80. It means 80 is not included here. 80 is included in the next tab. Done. Let's try to understand about the senior citizens which I am recording over here. Senior citizens up to what? Up to 3 lakh rupees. Up to 3 lakh, what is it going to be? Nil. 3 to 5 is going to be 5%. 5 to 10 is going to be 20%. About 10 lakh, it is going to be 30%. Clear? Next. For resident individuals at the age of 80. Now, see, is exactly 80 included here? Absolutely yes. 81 included here? Yes. 89 included here? Yes. 95 yes. 100 yes. 120 yes. 150 yes. 200 yes. Anything for that matter, people. Anything. After 80, first of all, leaving this word only, so it's a bonus. Correct? No. That fellow, the papa, those people living with the knee pain, with the back pain and all. 80 plus if is living 80 or more. Exactly 80 is also covered. If that person is living for the year 80 or more, it is going to be considered as senior for as a resident individuals. Clear? For resident individuals at the age of 80 or more at any time during the PY. Clear? Up to 5 lakh, it's going to be nil. See here, the basic exemption limit here it has changed. Here it was 2.5, here it is 3, and here it is 5. Remember. Up to 5 lakh, it is nil. 5 to 10, it is going to be 20%. About 10 lakh, it is going to be 30%. About 10 lakh, what is it going to be? It's going to be 30%. This is the slab rate which is applicable for AY 24-25 for individuals HUF, AOP, BY, AJP. So much. Clear? Everyone? Done? Now, let's try to understand whatever you have seen is the normal provisions, people. Whatever you have seen is normal provisions. Now, let us try to understand about the default tax regime that is coming under section 115 BAC of the Income Tax Act 1961. What are we treating it as? A default tax regime coming under section 115 BAC. This 115 BAC is called with the multiple names, remember. 115 BAC is one name. Default tax regime, concessional tax rate, new tax regime, everything is one and the same. See, in your house, you will be called as in your school, you are given a particular name, which you'll be writing in a label, right? But you will be called as Ammu, Chinnu, so many things you'll be called. No? Your friends will call in some name, your parents will call in some name. And in a similar way, you'll be called with multiple names. Similarly, 115 BAC also. Lovingly, so many names are there. Default tax regime, concessional tax rate, new tax regimes, 115 BAC, everything. Everything means same. Everything means to stay same. There's no difference. Clear? Now, if I'm speaking about the concessional tax rate, remember this is applicable for HUF, AOP, BY, AJP. If you don't want to opt as per section, that is opt as per the normal provisions, and I come and opt for this 115 BAC, no. Why? Look over here, the tax rate which is applicable. Up to 3 lakh, it is going to be what? Nil. 3 to 6, what is it going to be? 5%. 6 to 9, what is it going to be? 10%. 9 to 12, what is it going to be? 15%. 12 to 15, 20%. Above 15, it is going to be how much? 30%. Above 15, it is going to be what? 30, 30, 30, 30, 30%. Remember, people, here there is a 20, there is no 25%. Remember, 20 and it is directly skipped to 30. No, remember that point. See here. Here before it is 3. How to remember this? Point being very simple. 3. Next 3 to 6. Add 3 lakh. 6 to 9. 9 to 12. 12 to 15. 15. 3 tables. Nothing else. Starting 3 up to 3 lakh, it is going to be exempted only. No. So it's going to be nil. After then it is going to be 5, 10, 15, 20. Keep on adding 5, 5, 5 over there. Simple. 5, 10, 15, 20. And then 25 is skipped over here. Directly 30. People, why such rates? See, before this 3 lakh, up to 3 lakh exemption being introduced, before it was like this 115 BAC, it was like this up to 2.5 lakh. Next 2.5, keep on adding 2.5 to 5. Next 5 to 7.5. Next 7.5 to 10. Next 10 to 12.5. Then 12.5 to 15. Then above 15. This is how it was. Then it is above 15. This is how it was. See how the percentage were. First of all, up to 2.5 is going to be nil. Then it is going to be how much? 5, 10, 15, 20, 25, 30. This is how the percentage was before this introduced. 115 BSc starting, it was like this. Then later on in the Finance Act, they removed this entire thing. They removed this entire point for that matter. They removed this entire thing and then they bought it this way. That's why see here 25 is skipped over it. So remember, starting from 3, keep on adding 3 for remembrance purpose only. I'm telling you 3, 3 to 6, 6 to 9, 9 to 12, 12 to 15, 15. Next, the tax rate which is applicable starts with nil. Nil, 5, 10, 15, 20, hold. No 25, directly 30. Clear? Everyone? Simple. Now, what are the conditions? See, first of all, whatever the 115 BAC which you are recognizing, these are the optional, this is an optional tax rate which is available, correct? Everyone. So there are certain conditions that you need to satisfy in order to say okay for this. Okay, if I want to opt for this, government or department has told you have to leave certain provision. That is, you have to leave certain exemptions for that matter. People, if you have to leave certain exemptions over here, what are those which is given? Leave travel concession, next house rent allowance, next exemption for the allowance, these daily allowance exemptions, tax holidays, entertainment allowance, professional tax, interest on loan, additional depreciation. All these things you need to remove. Everyone, all of you are clear as of now? Simple, great. See, you have to leave all these exemptions in order to get to those, in order to get the 115 BAC tax liability to be under section 115 BAC. You have to leave all those things. Simple, everyone. See, what will be the difference for that matter? We are going to see once we are solving a question. We are going to solve the question under both the perspective. That is under the normal tax provision also, under 115 BAC also. Over there, you will have a clear understanding. Simple. See now. Now let's try to understand the time limit. See, if you are an individual, first of all, it is given to individual HUF, AOP, BY, AJP. If you are coming under these eligible category and you are having no business and income at all, let's consider you are an individual going for work, proper employee, going for work, coming back home. That's it. You are not doing any business as such. If that is the case, remember, there's a flexibility for you to switch. That is opt in this year. Next year you can opt out. Then in some other year you can opt in. Some other year you can opt out. That flexibility is there. That is depending on you. This, if you're if you're an individual HUF, AOP, BY, AGP for that matter, and you're having a business income over here. You're having what? You're having a business income. You're having a business income over here. So what you can do is that you can opt out of the default tax regime. If you want to opt in, opt in. Can you opt out? Yes, you can opt out. Remember, once you opt out, you can't opt in. Simple. That is, after withdrawal, unable to exercise the opt out option again, except if no business income remains allowing shift. Once you opt in, you can opt in. Yes. You have opted out? Yes, you can opt out. Once you opt out, you can't opt in again until and unless you don't have any business income. Then again, you come to this category. Simple. Everyone. Now, see, the AMT liability is not retracted. Remember, people, this AMT is alternate minimum tax, wherein this alternate minimum tax, if someone opts for this default tax rules for that matter, they don't need to pay the alternate minimum tax. That is, If you are opting in for the normal provision, what will happen is that I'm just giving you an idea with regarding to AMT. I'm not speaking entirely about the AMT over here. If you're opting in for the normal provisions, now you have to compare with the tax liability which is coming as per the AMT, alternate minimum tax. Now, whichever is higher, you have to pay the tax as per that provision. Suppose let's consider the normal, as per the normal provisions, the tax liability is 1 lakh, example only. As per AMT, it is 1 lakh 20,000. Which one will you end up paying for? You will end up paying for 1 lakh 20. But now you're paying 20,000 more than the normal provisions. No. So to that extent of 20,000, you're going to get what? You're going to get the your to that extent of 20,000, you're going to get the credit for that matter under AMT. Okay, you're going to get the AMT credit 20,000. If you opt in for this 115 BAC, you need not have the headache or do anything with regarding to this 1 lakh, that is any calculations with regarding to AMT. That is, if you're opting for 115 BAC, there's no calculation of AMT which would be necessary. And also, if the previous year you have done this and you have 20,000 rupees credit. See, choosing these rules means they can't get the refund of any AMT that previously paid. Means it is going to be lapsed for that matter. The 20,000 rupees, whatever you would have paid before, that is, whatever you have paid extra and you have got credit. Credit you can't utilize if you are paying it under 115 BAC. That is what it means. Simple. Everyone. Great. You guys also drink water. I'll also drink water. No. This is about the provisions. Okay. Now let's try to understand about the surcharge applicability over here. Let's try to understand about the surcharge. See, with regarding to the surcharge which I'm considering over here, surcharge applicability for individuals, it's going to be different. That is surcharge applicability for individuals in case of normal provisions, and in case of 115 BSc, you have two different surcharge applicable provisions separately provided. Okay, we'll try to see one by one. First, we'll look into the normal provisions for that matter, and then we'll come back to 150 PSC. See, in case of the surcharge applicability, in case of the individuals, HUF, AOP, BOI for that matter, wherein we are excising the option to shift out of the default tax regime. Where they are intending to shift out of what? Shift out of the default tax regime. Shifting out of default tax regime means, my dear people, always remember, it means you're opting for normal provision. You're not opting in for 115 BAC is what it means. In your question paper, in 100 places you will see shifting out of normal tax, default tax regime, shifting out of default tax regime. It means that fellow, that person is not opting for 115 BAC is what they mean. Simple, everyone. See, now let's try to understand about the surcharge. See here, where the total income, including the dividend income, first of all, where the total income, including the dividend income and capital gain, which is chargeable to tax under section 111A, 112 and 112A, is greater than 50 lakh but less than or equal to 1 crore. Is greater than how much? 50 lakh but less than or equal to 1 crore. The rate of surcharge which is applicable is going to be how much? 10%. The rate of surcharge which is applicable is 10%. What do I mean by this? Try to understand. Total income including dividend, capital gain, that is capital gain which is coming under these three sections, 111, 112, 112. These three, remember as of now, these three are the capital gains wherein there is a special rate of tax. The special rate of tax, the small coverage of the point, we are going to see it in this basic concepts only. But try to understand these are having special rates of tax. It means it doesn't go as per the slab rate which we have studied as per the individuals. Slab rates you have seen, no, up to so much and so much income, you're up to 2.5, no tax, 2.5 to 5, it is going to be 5%, then 5 to then it is going to be 20%. You saw that, no? But slab rate will not be applicable in this case. It means the flat rate. That is, special rates of taxes are applicable for these three categories. Simple. Where the total income, including the dividend and capital gain income, is greater than 50 lakh but less than or equal to 1 crore. People, why is it provided? That is, why is this specific category of these three are considered? Is that there's a reason for the same? Try to understand. Okay. Before, that is some years back, the dividend income up to 10 lakh rupees was exempted in the hands of the shareholders. That is, if I am, first of all, what is dividend income? I am going and investing in some share capital. The return which I'm getting is my dividend. So, whatever the dividend which I was getting up to 10 lakh rupees, it was exempted before. Now, what happens? Every rupee of the dividend income which you are receiving now is going to be taxable. Everyone, they removed that exemption up to 10 lakh rupees for that matter in case of the dividend income. Then next, capital gain which you can see over here. Remember people, capital gain on the shares for that matter before, long capital gain was completely exempted. That is, on or before 31st Jan 2018, the long term capital gain which you got out of shares and all, it was totally exempted. That is, even though you get 10 crore rupees as your gain from the sale of shares, long term capital shares, that is long term capital gain which you're getting out of sale of shares, entire 10 crore was exempted. Oh my god, exempted. It was not taxable at all. But now what happened? They removed that exemptions from on the, that is on the finance, the budget date which was announced on 1 to 2018. They removed it. That is, now it has become taxable. So whatever the exemption which they have removed now, that is with regarding to the dividend and with regarding to the capital gain which you can see, think people, before it was not taxable at all. Now it has become taxable. And that taxability, what has happened, they are considering it to be different over here. I'll try to tell, and you will understand why that concept of including and excluding is happening over here very soon. We'll continue with the provision and then we'll come back to the story very soon. Okay. Where the total income including this dividend and capital gain. Now we have understood there was certain exemption which was provided before. Now it is not provided. They want to include certain few provisions, that is 112, and these three are going to be considered as special rates of tax. Okay. Where the total income including the dividend and the capital gain income is greater than 50 lakh but less than or equal to how much? 1 crore. The rate of tax which is applicable is going to be how much? 10%. The rate of tax which is applicable is a 10%. What do you mean by the rate of tax which is applicable is 10%? Is that is the surcharge applicable on that income is going to be 10% if your income is exceeding 50 lakh but less than or equal to 1 crore. Simple. Now, whatever the dividend, let's try to understand that with an example. Dividend 10 lakh, short term capital gain 111A 20 lakh, 112 15 lakh, 112A 20 lakh, other income 25 lakh. If you consider the entire income, because the total income including these three categories is what I have told. So the surcharge which is applicable is 10% on, remember people, the 10% whatever you are writing is not applicable on that 90 lakh rupees. It is applicable as per the tax applicable on 90 lakh. Everyone. So I'm just taking a random example, not the actual amount. For that 90 lakh, suppose, just an example, people, not an actual amount. Suppose for that 90 lakh, suppose the tax on that income, on the total income of 90 lakh, the tax liability, just an example, is going to be 30 lakh, suppose. Okay. And whatever the income tax which you have calculated 30 lakh, now you're thinking, okay, is surcharge applicable or not? In order to answer that question, you are going to look into this point. Is surcharge applicable or not? If my income is greater than 50 lakh, less than or equal to 1 crore? Yes, it is greater than 50 lakh, less than or equal to 1 crore. Yes, surcharge is applicable. But on what amount surcharge calculation goes on? Surcharge calculation goes on 30 lakh into surcharge calculation will go on like this, 30 lakh into 10%. 10% on income tax computed on a total income of 90 lakh. In my example, just an example, I have taken 30 lakh is the total income. That is 30 lakh into 10% is going to be how much? 3 lakh. So my total on this 33 lakh, I'm going to add HEC at the rate of 4%. As usual, I'm going to record and I'm going to write the totals. Finish. I hope everyone have understood this. Surcharge calculation goes on the tax, income tax on that total income. But applicability to say yes, surcharge is applicable, no, surcharge is not applicable. You're going to look into the total income. Clear? Great, great. I have written here greater than 50 lakh but less than or equal to 1 crore, right? It means is 50 lakh exactly included? Remember, 50 lakh is exactly not included. Greater than 50 lakh is what they are speaking. Exceeding 50 lakh is what they are speaking. Is exactly 1 crore included? Absolutely yes, because 1 crore is included. Clear? This is going to be what? 10%. 10% on that. Now, where the total income, including the dividend income and the capital gain, which is chargeable to tax under section this, if it is greater than 1 crore but less than or equal to 2 crore. What is it? If it is greater than 1 crore but less than or equal to 2 crores for that matter, it is going to be how much? 15%. It is going to be 15%. Surcharge which is applicable is going to be how much? 15%. Done? No. Dividend income is going to be 10 lakh. Short term capital. Let us try to understand with an example. 10 lakh, 40 lakh, 35, the total which you have recorded. Here, it is total income including these dividend capital gain. So, in my example, I have added everything. It is coming up to 1.9 crores. So, can I say it is more than 1 crore but less than or equal to 2 crore? The surcharge applicable on the entire amount of the income tax which I have calculated is going to be 15%. Applicability goes with the total income consideration. Calculation for that matter goes with the total income tax computation. Remember these two differences for with regarding to surcharge. Everyone? Great. But the total income excluding the dividend income, now you can see in these two situations it was including. Now you can see it is excluding over here. That is where the total income is excluding dividend and the capital gain income is greater than 2 crores but less than or equal to how much? 5 crores. Is greater than 2 crores but less than or equal to 5 crores for that matter, then it is going to be what? Rate of surcharge of the income tax which is leviable or applicable is going to be 25%. It's going to be how much? 25%. Everyone, where the total income excluding dividend capital gain for that matter is greater than 2 crore, less than or equal to 5 crore. Remember people, I'm excluding dividend and the capital gain over here. If I exclude that, whatever the income which I get, for that how much am I going to record? 25%. What about the excluded part which I've recorded over here? The excluded dividend income and capital gain always and always remember that can never exceed 15%. Why? I'll continue with the story of which I've told some few minutes before. I've told you dividend income before the exemption was there, now exemption removed. Capital gain, long-term capital gain before exemption was there, now exemption removed. Today, when that exemption is removed, first of all, people are trying to pay the tax only for that. And you are coming and stating, or if your two income is 2 crore, including dividend and capital gain, if it is more than 2 crore, less than or equal to 5 crore, pay a surcharge of 25%. People will cry, no? They are like, Arey, before you have given exemption, give little concession for us, no? They are like, okay, fine, you do one thing. For the dividend and capital gain only, I will give you certain little freeness for you. That is, you don't need to pay surcharge exceeding 50. But if your income without considering this only, if it is already crossing 2 crore, less than or equal to 5 crore, you are rich people for life. Yeah, pay a surcharge of 25%. Pay for us. No, you are earning income over here. Pay tax for us also. Simple. Now, Let's try to understand the same thing with the help of an example. See your dividend income. First of all, this is a typing mistake. 51 lakh should come here. So dividend income 51 lakh, short term capital gain, long term capital gain, and all these things we have had it. Remember, people, I've told you what total income excluding this. So in the question continuation, other income is 3 crores. That is, if I if I consider my total income excluding this, it is going to be 3 crores in my example. It is going to be how much? 3 crores in my example. So if I'm considering this one, on this 3 crores, whatever the income tax which I've calculated on this 3 crores, I'm going to charge how much? 25%. And whatever the income which I've excluded over here, on this I'm going to charge 15% as a surcharge. Remember, people, I'm telling you again, it is the surcharge will always be on the income tax calculated, not on the flat amount. Applicability only we are going to look into the total incomes. Clear? This 15%, this is going to be 25% simple. Done. See now the next point. Where the total income again excluding this dividend capital gain for that matter is rupees is greater than 5 crore. That is without you considering your dividend income, without you considering your capital gain income, it is exceeding how much? 5 crores for that matter. It means you are a richest person for life, pay 37% surcharge. That is, on the income tax which you have calculated, pay 37% surcharge on that income tax calculated. See here, in that example, and whatever the exclusions which you have done over here, remember here, very simple. Don't worry. Don't pay exceeding 15%. Similar point of the previous one is like this. Similar one. That is, if it is already exceeded, I pay 37%. For that excluded of dividend and capital gain income, if you have, make sure that you are not paying exceeding 15% for that matter. Clear? Now, the dividend income is there, such as all these 3 points and other incomes. For this other incomes, we all know for this other incomes, it is going to be how much? 37%. And for these incomes which has been excluded, you cannot pay not exceeding 15%. Clear? Such as 37% you are paying on the 6 crores and 15% you will pay on this excluded amount of dividend and the capital gain income which you have recorded. Simple. Everyone. See now the last point is little bit trickier. See here. Where the total income, including the dividend and the capital gain income for that matter, is greater than 2 crores, but not covered in the cases above 3 and 4. Basically, if it doesn't come under the concept of 1, 2, 3, 4, it comes under 5. How? Let's try to understand with an example. Okay. See here, your dividend income is 55, short term capital gain is 60, long term capital gain is 42, and this is long term capital gain under section 112 is 35. Other income is how much? 1.1 crores. And if you add everything, you will get 3.202 crores. Okay, first let's try to apply the third concept because it's already exceeding 3 crores. First two will not be applicable, it will start from 3. See here, if you apply the third over here, what have they told? Excluding this 3 income, it should cross 2 crore but less than equal to 5 crores. But if you exclude these incomes, it is less than your 2 crores. No, it will not come under your point number category number 3 now. Now let's look into category number 4. It should be greater than 5 crores. It is not greater than 5 crores excluding this income. So it will not come under category 4 also. So if it doesn't come under category 3, doesn't come under category 4, it will come under your category number 5. Wherein for the total amount of entire amount of whatever the total income is, the tax you have computed, make sure that you are paying the tax at the rate of 15% and closing it. Simple. Clear, everyone? I hope it is understood. This is the surcharge with regarding to your normal tax provisions for that matter. And for 115 BAC for individuals HUF AOP BY AJP, 115 BAC, that is under default tax regime, the first 2 points which you have seen over here remains same. Copy paste provisions. First 2 provisions remain same. From the third provision, there is difference. Let's try to understand. See here. Where the total income, that is, I'm doing the surcharge under section 115 BAC, where the total income, including the dividend and the capital gain for that matter, is greater than 50 lakh, but less than or equal to 1 crore. The surcharge on that is going to be 10%. Question also being same and the concept also being same. If it is greater than 50, less than or equal to 1 crore is what been specified. It means, is exactly 50 lakh covered? No. Exactly 1 crore covered? Yes. Enter the first category. Same point here, no difference at all. Where the total income including capital gains, this is greater than 1 crore but less than or equal to 2 crore. It is going to be how much? 15%. This is surcharge on the income tax for the matter. Clear? If it is other income over year, see, if you do the totals, you will get 1.85 crores. And what is it going to be? The tax which is leviable is 15%. Same like what you have seen before, the same point. Look into the third point. Where the total income excluding dividend income, capital gains for that matter, is more than 2 crores. Previously, under the normal provisions, it was more than 2 crore, less than or equal to 5 crore. They have not bought that category of less than or equal to 5 crores over here. It is just 25%. What they have recorded. Simple. Easy. 25% of the surcharge is applicable if your income is crossing 2 crore, excluding this. Finish. No concept of 37% surcharge in under your 115 BAC. That is the clear. Same. See, other income excluding that, in the for this you are going to charge how much? For this you are going to charge 25%, and for this whatever you have written they are going to charge 15%. Simple surcharge. Everyone. Next, where your total income including your dividend income capital gains is greater than 2 crore in the cases not covered above. See, if it is, look into this example. If you consider the total of this one, this is crossing 2 crore, 2.77. Everyone. If you come into the case number 3, you should exclude, no? If your total income is excluded, excluding this income, then it is just going to be 1.1 crore, which doesn't come under case number 3. Then obvious it will come under case number 4. Then it is going to be how much? 15%. On the entire income under the category 4, the surcharge which is applicable is going to be 15%. Simple. I hope everyone it is very clear. Done.